Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. Look, today is a relatively quiet day. Today's Friday. However, you get to this point where when a calm day suddenly looks suspicious because, with everything that we had in 2025 and so far what we had in 2026, a calm day, like I said, looks a little bit suspicious. So look, we'll look into the markets, we'll see what's happening there. We'll go through the technicals, we'll see how we can position ourselves for today and for next week. And yeah, hopefully you'll enjoy the session and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Yes, the 16th of January, 2026. So we're mid-January already. So, New Year was just around the corner and now we're in mid-January. Honestly, time flies, really flies. Look, ladies and gentlemen, I hope you're enjoying the moment. I hope you're enjoying this week. This week was kind of started off crazy, but then it kind of calmed down a little bit. Look, before we go any further, before we dig into the markets, let's see the risk disclaimer. Yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Double check if everything is running smoothly here. I'm seeing there is a little bit of a lag here, but I hope it's not disturbing anybody too much. Right, okay, so let me know in the comments, by the way, whoever's tuning in right now watching this live, let me know in the comments if everything's coming through okay, if you can hear me and see me well, no interruptions. So yeah, just out of curiosity. And yeah, well, a general hi it would be also good. Okay, so first of all, of course, there is a disclaimer. We got through that one. Let's have a look at our website. If you have any questions, reach out to us. We'll be more than happy to assist. And yeah, let's have a look at the economic calendar very quickly. So, look, Friday today, we got the inflation numbers from Germany. There we go on the lower side. Look, it came out as expected. By the way, I don't know if I've mentioned this before and I'll say it again. The Eurozone, the German numbers, they tend to come out as forecast. Most of the time they're like hitting the forecast. It's rarely that they come out, let's say, with a surprise. When they do come out with a surprise, either to the upside or to the downside, then yes, I mean it's it's a big deal anyway. Anita Prinsloo, hey, good morning. You can hear you clearly and see your screen. Perfect. Thank you very much. That's what I like. This is what I like. Honestly, Anita, you're making my day already. It's nice. It's nice when you have like a nice conversation. I know that this is kind of the type of job that I do. Like, I mean, I speak to the screen and I speak to the camera and I appear there. It's most of the time it's a monologue, but I keep on reminding that these live sessions, the Markets Talk webinar, is kind of for more of an interaction. If you have any questions, honestly, fire them at me. The top news segment that we have, that one's like, that's recorded and just kind of a breaking news thing. Yeah, these sessions are more of a interactive ones. But yeah, Anita, thank you very much. Thank you very much. I really appreciate that. Okay, look. So in terms of economic data, so yes, German data came out this way on the lower side. I think that now we're getting to this little point where the ECB will have to figure it out if they want to drop their rate below 2%, because currently it's sitting at 2.15. If they would go for another 25 basis point cut, then well, we would get it to 1.90, right? So again, is this something that they want to do? If they want to drop the rate below 2%, I don't know. I really don't know. I think that they will keep it. I think they're not going to rush into things. I think that for this year at least, I think that the rate will stay the same. I really doubt that they're going to shift anything, do anything this year. I think the rate is already very low, 2.15. That's, across the major central banks, that's kind of one of the lowest ones, of course. Whereas UK, for example, is still at 3.75, US at 3.75, China 3. Yeah. So in a way, Canada 2.25. That's probably the closest one. But anyway, I think that yeah, ECB will continue staying with their 2.15 rate for the remaining of the year. I really doubt that they will shift, unless really they want to boost demand. If suddenly demand drops heavily and they decide to, like we need 2.15 is not enough, we need to actually drop it a little even lower. It's going to be an interesting one, of course. Maybe this way they would try to, attract more mortgages and stuff like that. So could be the case. However, they have to be very careful. Things change in the economy nowadays very quickly, so inflation could pick up again. So just I think that, like I said, right now ECB is at the optimal point. So where they're not going to do anything, just going to continue observing. They're going to feed us with every meeting. There will be something saying, we will remain data dependent and we'll continue observing the situation in the economy in Europe, especially Western Europe. And yeah, I think that's the path that they're going to take. Anyway, so going further today, we have the housing starts, yes, from Canada, and industrial production and manufacturing production from the US. Basically, not a major day for data to come out, but whenever we have, let's say, we don't have much data to come out, we keep an eye on politics, because the moment politics is, geopolitics is the driving force in a way. So if you remember the way the week started, everybody was kind of thinking, okay, so which day and which hour will the U.S. strike Iran? And this now has faded away a little bit since yesterday, and I think that the the realization came from the fact that oil could actually spike higher. I don't know if they didn't see this, or what was the case, but maybe it was just a little bluff here or something. But look, I think that at this point, to which one do you need? The more expensive oil, or just kind of freedom in Iran, right? So it's like, which one do you need more? And I think at this point you need the cheaper oil right now, because for now they cannot. The U.S. wouldn't afford to have, let's say, fuel prices shooting up very much, very very high, and given the fact that you have the midterms coming up this year, higher oil prices, higher fuel prices at the pump, it's not really something that the main electorate of this current administration would appreciate. So because again, everybody drives a pickup truck, right? So that takes a lot of fuel, and every few cents kind of matter, and especially when your wages are not really, let's say, going higher. So again, that's, like I said, and this is where the interesting bit comes in. So you need to kind of keep the oil prices on the lower side, because at the moment, like, I'll jump into commodities in a bit, but you know what, let's jump into indices straight away. But yeah, the situation, like I said, with Iran, I think they kind of doubled down, unless the other option, as I discussed on Wednesday, is that to do something that they did last year, basically fly in, drop a few bombs here and there, kind of punish the country, and then fly out. So yes, we would see oil jumping higher a little bit, but then it would stabilize and move back down. So again, this is like I said, this is the little game that that currently they have to play, and also the fact that you have tensions with around Greenland, and that's something that you don't want to mess around with too much, because again, you might lose some allies, and yeah, it's gonna be. I think there's a lot of bluffing happening right now, or actually maybe the idea, like the ideas were very ambitious, but then like I said, the realization kind of hit them hard, and they kind of realized, oh wait, this could lead to that, and this is actually what is more worth it at this point in time. Can we afford like much higher oil prices? I don't think so, because like I said, we have the midterm elections coming through this year, so you need to please the electorate. Anyway, Nikkei 225. So the beautiful thing here is that, look, this week started for Japan. That we know that next week we have the BOJ interest rate decision on Friday. That's happening. Let me just double check. Yep, that's from Friday. And certainly that's going to be a focus. We'll see what's going to happen there. Quick spoiler alert: nothing will happen, because at this point I don't think that the Japanese government would like to see higher rates. Although the BOJ is on that path, but I think it has to be a gradual path, because way too many things are involved here, not only domestically but also internationally. Look. I said this already, like I said, if you watched my sessions before, but I'll probably repeat myself. So at this point, you have your, somewhat of lower rates. You have your Japanese yen kind of devaluing a little bit. You see Nikkei rallying because, again, those big Japanese corporations are currently attractive. Their produce is currently attractive to the global arena, because the Japanese yen is weak. So you have this short-term situation where everybody's gaining. Congratulations to them. But then in the longer term, when people start realizing that inflation is getting way too high, because at the moment inflation is around 2.9 in Japan, and it is still on the lower side, don't get me wrong, because last year we saw levels of 3.6, 3.7. The beginning of the year was, in general, like January was 4. It wasn't the January number, it was the December number, but, or actually, wait, sorry. And this is where I need to double check myself, because Japanese are quite on track with data. They're quite on track with, yeah, that's December. Yeah, that was December number. So yeah, sorry. Because again, I know that the Japanese are quite, actually, like I said, as I already said, on track with, they're kind of keeping very up to date numbers. So this is good. It's a good thing. But anyway, so yeah, you have the situation where right now the rates are okay-ish. They're still, attractive for businesses, but the fact that the BOJ has already kind of signaled that, look, our path right now is going to be to the upside, because we will need to control inflation, and that's what they're going to do, because Japanese yen is weak right now against its top major counterparts. Yes, it's a good thing in the short run, because companies can sell their produce and products and services to other international buyers. However, this will catch up, that people will realize that, oh, you know what, actually we're not very good, we're not very better off. So, and this is where, like I said, the BOJ will have to intervene and go and hike some rates. That everybody, this is, I like I said, I also said this before, and I'll continue probably saying every session that, oh, excuse me, that you have this period, the rational economics, rational expectations in economics, where it takes people for roughly a year to realize that there is a problem. So at this point, let's say you have devaluating yen, but still businesses are doing good. So it's kind of offsetting this moment of maybe it's the businesses are passing on some profits to the workers, and basically workers are kind of okayish. That's why nobody's ringing the alarm bell. But then eventually it will pick up, and then people will say, oh, wait, this loaf of bread costed me that much yen, and now it's going to be like 200, 300 yen, and now it's like I don't know, like now it's like 400, 500 yen. So yeah, it's a bit of a problem. So long story short, I would like to say that keep your eyes on this. For now, like I said, everything seems to be booming, seems to be fine. Japanese Nikkei is on the higher side. Look at this. I mean, we've created a new all-time high this year. This year and this week. And on Wednesday, to be more precise, and that we hit the area near the 54,000, kind of almost 500. So very close to the 500 level. I'll say it this way. If we want to see some higher levels, then a break of that barrier would be needed. This way, a forthcoming higher high will be confirmed, potentially attracting more buyers into the game. For the downside, actually at this point, given that we already shifted a little bit further, I would rather wait to see a drop below the 52,636 territory, or 640. A drop below the 640 here, 52,640, would attract a few more sellers into the game, in my opinion. But again, from the short-term perspective, because we could travel to this upside support line drawn from the low of the 18th of December. Sipa, hi! I can see you there in the chat room. Thank you very much. I mean, for your comment. I wish I could know. I wish I could read what you wrote there. But hey, hopefully, hopefully nothing kind of nothing bad. But anyway, thank you very much for tuning in. And whoever, look, again, this is, you don't know all the languages. I know 3 languages. I speak 3 languages fluently, but unfortunately, this one's not one of them. But yeah, coming back to the situation here, yeah, look, very simple actually approach here on Nikkei. I'm being very careful right now because, the way I called this webinar today, it's kind of, the U.S., what's the U.S. next move in a way, right? It is true because you don't know what's going to happen here right now. We really are waiting to see what's going to happen. We really want to see, let me just put this one here. By the way, don't forget to like and subscribe. That would be great. We would really appreciate it. But yeah, we were waiting for the U.S. next move because at the moment it seems to be that they've toned down a little bit on the whole attack of Iran, and which is good. We don't need more escalations, but I think that, like I said, it's not because of the suddenly they realized, oh, we know we should not be attacking them. It's all okay. No, it's all about the oil. As always, it's all about the money. So in general, whenever you see a conflict and somewhere, look, follow the money. Honestly, search for the money. Where is the profit? That's how you determine why there is a conflict happening. And we no longer have, in general, actually we never had wars where those were like maybe some wars were ideological in the past, but now that's it. We're done. It's all about profit. Because somewhere something is lying in the ground, which somebody needs, as usual. Anyway, so yeah, let's keep an eye on this. Of course, let's jump into Shanghai Composite very quickly. Beautiful decline, beautiful correction back down towards that 23.6. Great. What I said to you on Wednesday, we were already hitting this area here on Wednesday. So what I said to you as well, that look, if we do drop below that 23.6, I will consider a little bit of a move towards the 38.2 here on my Fibonacci retracement, which is drawn from the lowest point of December. Yeah, is it actually the lowest? Yeah, the lowest point of December to the current highest point of January. And yep, I think the 38.2 looks quite attractive because the 23.6 has been quite attractive for sure. So yeah, we're keeping an eye on this one. If you're looking for some higher levels, then a push above the current highest point of January would be needed in order to get a little bit more comfortable with the upside. Now, this is not the all-time high because, hey, Shanghai Composite still has a few nice levels to touch on the upside here. So I would say this way, that for now, it could become quite interesting at one point, the Shanghai Composite here. But I think that we need to see now a nice, maybe correction. I would really love to see a correction, to be honest. I mean, I'm going to be one of those party poopers that he'll say, you know what, I would love to see a correction, but hey. Anyway, so let's jump into the U.S. market. Yesterday, beautiful movement here to the upside. Dow was the big gainer, followed by the S&P, and followed by NASDAQ. Look, it's always, sorry, not always, most of the time is the case when, if the Dow is the gainer, NASDAQ will be the kind of the third one, in the biggest loser in a way, or like the least gainer, and then S&P will always be somewhere in the middle. That's kind of the case all the time. So yeah, if what I'm seeing here is that if you're looking for some For some higher levels on this one, well, I think a push above the current all-time high, which is around the 49,633 area, would be required. By the way, yesterday, do we have some data? I think we had. No, that's next week. Next week, by the way, we have quite a busy schedule. I'll jump into that at the end of this session. Yeah, we had a few pieces of economic data that says like the Philadelphia Fed Manufacturing Index was quite an improvement here. So great news. Anyway, so and in general, yesterday the some chip stocks, like TSM was the big gainer yesterday. Let's have a look at this one. This one reported great results. It did do good. It did gain, but then it retraced back down a little bit to kind of, I think it was profit taking a little bit. Look at this, we're at all-time highs. We created a new all-time high yesterday. So I think at this point where, it's we're creating these all-time highs, I think you need to be very careful with the longs. Although everybody could say that here, when we were around 225, now we're like, I think this could go further north, don't get me wrong, but I don't know. Me personally, I'm gonna say it this way. Me personally, I really don't like to capture something at the top, buy something at the top. But again, it's everybody has a different strategy. So please do not follow me because maybe you will be missing out on something. So I'm just saying here, what I would, my opinion, But I really, like I said, I don't like to go at at highs. I think nobody does, but anyway. By the way, ladies and gentlemen, whoever's watching this right now live, please let me know, what do you trade? What do you mainly trade? I mean, probably maybe you do everything, but or let's say most of the time, which instruments do you trade? Let's jump into S&P 500. By the way, yesterday banks. By the way, S&P 500 did gain, but not much. I mean, did gain initially, but then it kind of failed to reach an all-time high. The all-time high was reached on Monday here, but we came close on Tuesday. Wednesday we sold off, and now on on Thursday we came close again to test that all-time high, but we failed to kind of test it, and we reversed back down. That said, we are still above this little short-term upside support line taken from the low of the 21st of November. Now, okay, look, it's an interesting one here. I mean, on one hand, we're failing to create a new all-time high. On the other hand, we're failing to move lower, to go for a lower low. Let me just double check here something. I wanna check what's happening right now, because this is the one that I'm looking at. The index is the main like hours. I like to look at it this way. When there's less noise. So at the moment, like I said, we're still above this upside line. We are, I would say, somewhat bullish still. And if you're looking at some higher levels, let me just double check at some higher levels what's happening. Now, very quickly, Dow. What's happening with Dow right now? Dow is kind of elevated. It's 49,500, so we're above closing. And the U.S. Cash, the futures right now, and the cash index is moving around 6,865. So yeah, we're above. Basically, we're still stuck here. This is an interesting bit. We're still stuck in this little squeeze moment here. Now, I would say it looks a little bit more bullish than bearish. I mean, we keep on creating these higher lows, but currently we're struggling to go for a higher high. I'm not going to rush into things, ladies and gentlemen. I'm just going to say be careful for now. Just keep your eyes on this. Keep your eyes on this barrier on the current all-time high. I think the 7,000 should be tested. We're very close to it, so might as well test it out. So why not? I don't see the issue with that. But then, if it clears that, I think, yes, further upside, there could be still some further upside, maybe towards the upper side here of this Bollinger Band on the daily chart. So, and then, yeah, that's something around the 7,023 zone I have here. Keep your eyes on that. But again, yes, the breakout point could be this 6,986. If we clear that, a forthcoming higher high will be confirmed. Let's jump into NASDAQ. Oh, by the way, I forgot to mention banks. Yesterday, Goldman Sachs reported fantastic results. Look at this move here. Boom to the upside. Amazing. You know, this is an all-time high for Goldman. Yep, this is an all-time high. And I think this could still drift a little bit lower. Morgan Stanley as well. Great result. Also all-time high. Look at this. Look how many months in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months in a row we're seeing rallies in this. And honestly, tell me that this is not parabolic and this should not be shorted at some point. It cannot go all the way higher. I mean, it will probably go hit 200 or something like that on Morgan Stanley, and then we'll see. Then, you know, with Goldman Sachs here, 1,000. I think it's doable. I think it might be, you know, a number that they're watching, and I think this is something that, you know, everybody's already kind of taking it as a given, right? I mean, it's not something that's going to be, oh my God, surprise, surprise. No, it's like, it was like the same story with NVIDIA, when NVIDIA was still, you know, before the split, when we were hitting that 1,000 level, and yeah, that was crazy. Here the last time it was split 10, you know, 1 to 10 to 1. So we were hitting that, yeah, 1,000 level there. It was, like I said, it was also crazy. NVIDIA, this is the, by the way, you know, actually it's good that I jumped into NVIDIA, because I mean, I'm going to look at NASDAQ in a moment. NVIDIA here is, for now, it seems to be like it had its moment, you know. Maybe it's taking a little bit of a breather, and maybe there is something that's piling up. Of course, we can see, you know, deal makings happening here and there, this is maybe something that the market is kind of getting immune to already. Is that thinking, okay, yeah, we already know that NVIDIA is, you know, seems to be like trying to cover, you know, every corner. Give me something new. Give me something, you know. I think that the next big thing will be the situation with China, you know, in terms of, are they going to be able to sell their chips to China or not? So yeah, it's the thing. I think it's the big thing. But again, with a lot of politics involved in that, so maybe NVIDIA could actually fall, not because of its products. I mean, their products are good, but because of the political moves. I think that this is what the market should kind of expect a little bit. How much dividend? Oh, 0.01. Amazing. Amazing. Yeah. It's symbolic something, you know. Anyway, for now, like I said, for now, watching this one, great results in general for now. Actually for NVIDIA this year, how is it doing this year? Let's see. Where's that January? January, this is December. This is January right here, isn't it? There we go. So we are actually in the negative zone for the year in NVIDIA. Wow, this is interesting. But again, look, this is the beginning of the year, right? And I mean, things can happen. But in general, look, I mean, NVIDIA enjoyed fantastic rallies, especially from April of last year, at least, you know, 100% on there. Wow, that's like, yeah, that was spectacular. Anyway, going back to the indices, NASDAQ very quickly. So what's happening with NASDAQ? NASDAQ is struggling. NASDAQ is right now, well, let's have a look what's happening on the cash index. 25,664-ish zone. So we're above yesterday's close. We're somewhere here. I think this downside line needs to go away. Now we are only keeping this upside support line taken from the low of the lowest point of November. Now, if we do clear, I think if we do clear this territory, let me just grab a highlighting thing here, a rectangle. And if we do clear this barrier, I think, yes, we could go higher. And I think this is something that, you know, the market needs to keep an eye on. This is a strong area of resistance. If we clear this 25,827.30 zone-ish, it's not really the specific level. It's more of an area around that level. If we clear this one, ladies and gentlemen, I think this could open the door to the all-time high. And I think we could even create a new one and overshoot the previous one. So keep that in mind. Let's jump into German index DAX. Okay, German index DAX found resistance, fantastic resistance. This is what I talked about in my session on Wednesday. I said to you, look, if we continue to hold below this 25,000 kind of 455 territory, I think that there is a chance for a little bit of a retracement back down. And so far, this is what's happening. So far, this is the case. Now, I will abandon the downside scenario if we overcome this 25,455 territory, because at this point, like I think that given that we had already a great run to the upside, a little bit more of a retracement would be needed. So maybe, like I said, a drop back to this 25,127 territory. I have this Fibonacci extension that I've drawn here previously, which is drawn from the lowest point of November to the high of the 12th of December, and then the low of the 18th of December. Now, like I said, it worked out like a charm. It hit my 100% level here. We tested that 25,455, and now we're seeing a little bit of a retracement back down. Now, if I draw a Fibonacci retracement just from this rally, from the low of the 18th of December, all the way to the highest point of this year, in general, overall all-time high, you'll see that the 23.6 coincides just beautifully coincides with that 78.6 on the Fibonacci extension that I had here. And basically this becomes my target. This is something that I'm going to target. This is going to be something that I'm going to aim for. I think it's a doable level. Whenever you have a confirmation like this from like the two Fibonacci's, like one is like a retracement, one is extension, I think that this is quite a level that you need to surely consider. That said, abandon the whole thing. If we clear that 25,455 and we stay above it, then yes, like I said, I'll abandon this story here, this idea with this retracement towards that 23.6 or the 78.6 here on the Fibonacci extension, and then we'll just take it from there. The FTSE 100, we're seeing a little bit of a retracement, which is fine. That's okay. Nothing to kind of be surprised here with. But if we could see, the U.S. indices traveling higher a little bit, then maybe they could pull UK after it. Now, one thing that I forgot to say is that about DAX, that DAX lately has been moving a little bit the way it wants to move, and I think that this is a lot to do with surrounding Greenland and what's going to be the outcome of all this. And I think that at the moment the US indices and DAX are kind of not really linked together, and you can feel that in politics, of course, and of course we are seeing this in the markets as well. Let's see how this is going to play out, of course, but certainly excuse me. But certainly the FTSE right now is a little bit more linked to the US. And finally, the final index for today, DXY. DXY did overshoot the 99.2829 zone here. I talked about it. Now, what I said to you previously, that if we do push and stay above this hurdle, this 99. Let's round it up here, 30 maybe, then yeah, I will get a little bit more excited with the upside, where I'm going to aim for my 200-day EMA, and then we'll take it from there. For now, it's like I said, it's a good target. I'm still targeting this level, this 200-day EMA, but only if we continue to trade above the 99.30 zone. By the way, just a quick glance at VIX, still on the lower side VIX, so we're not seeing any fear kicking in yet. But certainly everything can change. We will have a spike like this. If we look at the last year's activity, eventually you will have something like this. Once a year you need to have, like, look at this, 2025, right? Let me just grab a date range. So from 2025, where's that? January, the first day of trading in January. This is 2025. And all the way to 2026. Now, December, there we go. So this is what I'm looking at. And okay, look, up, there we go. This is, I need to brighten this up a little bit, actually make it a little bit more transparent. No, not this one, I think it's this one. There we go. There we go. So there we go. It's a little bit easier on the eyes. Now, you know, you had this moment here and you had this strong push to the upside. Look at this. Once a year, you need to get something like that, right? Now, when will that happen? Of course, we don't know. You know, we need to wait. But in January, the way January started off in here was kind of okay, a little bit of volatility here. But then the main action kind of started happening in March, right? And then April, we were hit like crazy. If we go back into history again a little bit, we look at this spike. This happened around August time in 2024. Major like I said, major spike here to the upside. Then going back in the history, again, the whole year was like, you know, was quiet. So we didn't really have major moves like these. And yeah, it's like I said, we're going back into 2023 here, a bit of a move right there back in March. So and then after that, before the year, the 2022 was also, it was kind of more of a January thing. So again, it varies. You cannot really find like some sort of consistency or something. But certainly, will something like this happen again in 2026? I am sure that it will. Will it be as big as this? I mean, as the 50s, 60s or something? Could be, could be. You know, if I jump into a monthly here, look at this. At one point we had like 89. That was back in when? Oh, well, surprise, surprise. The financial crisis, right? The 2020. This is when COVID shot. This is when the COVID started. This is the big shock wave. And 2025 April time. That's the big tariff board next to the U.S. president. And that's what happened here. And this spike here in August, I can't remember what was that. I mean, if somebody's in here can remember, then please do. But I can't remember this one. But anyway, so yes, like I said, there will be a moment, there will be a time that this will shoot up again. But the only problem is we don't know. Hence why we are just kind of playing carefully the game right now here. Okay. Look, long story short, for now, keep your eyes on the VIX, keep your eyes on the market, of course, you know, once we start, and keep your eyes on the headlines. Probably the more, you know, if I think if Iran gets attacked, I think this is where, you know, a little bit of volatility we could see for sure to the upside here. Let's jump into the currency world, ladies and gentlemen, very quickly. AUDUSD, just a quick glance. Look, I'm not going to spend too much time on this because I said already everything what I said on Monday, on Wednesday. I'm waiting for this one to get out of through one of these, you know, barriers here. I need to clear either the 0.6660 in order to consider lower levels, where I could then aim for this one right here, the 0.6593, or I need to pop above this barrier right there, and then we'll just kind of take it from there. But certainly there, you know, we could draw some downside lines here, but at this point I'm not going to do that. I'm just going to observe the price action here. AUDNZD, one of my favorite ones. This one's stalling, and I like the fact that it's stalling around the 1.1636. It just proves to me that although we have oscillated around it, it's actually quite an important area to watch. And you know, if we do remain above that, then it kind of increases the chances for a further move higher. AUDJPY. Now, this is where the interesting bit comes in. You know, the markets are, in a way, yes, they're still in risk-on environment, but AUDJPY slowed down a little bit, and yeah, where it seems like the markets are a little bit worried and want to see what's going to happen next, because I think a lot will depend here right now on geopolitics, and not only that, and what's going to happen with Jerome Powell, because let's face it, it's not finished yet. You know, because you know, you started the attack, you want to finish it, or actually was this another little bluff or something like that? Let's see. Or just, you know, to scare him away, or you know, or to scare him in terms of you know, making a rate cut before he leaves, because we know that Jerome is leaving at the, you know, in May, so April is going to be his last meeting. And then June is going to be the next person. But look, and this is why we're expecting a cut in June, because look, if you remember, at the end of last year, we were kind of hoping to see actually one cut in April. But I think after these events, if I were him, if I were Jerome Powell, then look, even if I wasn't like, I didn't want to do those rate cuts, and I was thinking, okay, look, I'm gonna give you like a little farewell present. I'm gonna lower down the rates for you in April. Now I think that's not gonna even happen. I think that this is where you overstep the line, and I'm not gonna give you that. And whatever happens with the next Fed chair, doesn't matter. It's not my problem. But right now, at this point, I think they're not going to do the rate cuts. It's just going to stay like this all the way up until April. Then June, maybe we'll see something. And like I said, that's why AUDJPY will be one of those pairs that will react to the headlines, and we'll see what's going to happen there. But hey, we'll have to wait. We'll have to wait ourselves. Okay, look, ladies and gentlemen, let's have a look at EURUSD. EURUSD. Now this one's drifted below the 1.1618. Okay, that's fine. Everything is in line with the idea here. So for now, I will continue targeting the downside. And if we do drop and stay below the 1.1618, then yes, great, more sellers here could join in. We could target this upside support line drawn from the lowest point of August of last year. Going further, EUROJPY. Now this one, there we go. After a good run above this hurdle, this 184.92, we stayed initially, but then we failed, and there we go. We're drifting back down. So long story short, for now, I'm keeping an eye on this upside support line, taken from the lowest point of February of last year. I think this is going to be my target. I like this line, but if we do break this line, then yeah, lower levels could be met. But at this point, I think that yes, we need to be a little bit more on the careful side. I think there's a little bit more room for some downside. Downside, little correction lower. That's what I'm kind of talking about. Let's jump into. Let's jump into Euro GBP. My unfavorite. Oh, this one's interesting. This one's it seems to be like flagging out here, forming something of a bearish flag. Let's see if this is going to break out lower here below this 0.8645. We do drop below that, at the same time automatically we drop below the 200-day EMA, and then we'll just kind of take it from there. For now, I would say this way: I'm leaning towards the downside, and for now I am just gonna aim for the lower side of this falling channel, but I need a confirmation break first. Very quickly on GBPUSD, the dropped below the 1.34 area. There we go. Great news. I talked about this, and I also put it out in one of our morning notes, which you can always subscribe to. We dropped below the 1.34. If we continue to trade below it, I'm leaning towards the downside, ladies and gentlemen. Yep, very straightforward, to be honest. GBPJPY. Let's have a look at this one. A similar story as with a EUROJPY. We're drifting back down after a good run towards the 213.88 zone. There we go. We're reversing back down, and we're currently testing this 20-day SMA within my Bollinger Bands here. So if we do drop below it, and we break this little short-term upside line, taken from the low of the 24th of December, then yes, I'm gonna lean a little bit more lower. But again, I have to say it as well, I'm not really getting bearish right now, because again, there is still hope for the bulls that we could see a rebound here and a push higher. USDCAD, very quickly on that one. This one's stalling. I think that the Canadian dollar doesn't know what it wants to do right now, which is logical, because we don't know what's going to happen with oil. And if we see those attacks coming through, and again, by the way, remember I said to you that in the last sessions, one of the last sessions, I said that, look, you normally, if you want to attack, they normally do it on a weekend. Why? Because again, they don't want to do it when the markets are open, because you don't have enough time to do some damage control, with some statements, political statements and stuff like that. So you do it normally over a weekend and a Saturday, ideally Saturday, because you still have a Sunday to go through. So yeah, ladies and gentlemen, I'm keeping in mind that tomorrow could be somewhat of an interesting day, politics wise. Yes, but anyway, looking at this technical picture on USD CAD, certainly I'm watching this barrier, the 1.3919. A nice good pop above it may attract a few more buyers into the game. And if you're looking at some lower levels, then yes, a drop below the 23.6 could be nice. This way, it could open the door towards a larger correction back down. USDJPY very quickly is drifting back down, and we're testing this hurdle, this 158.89. I talked about this. This was the barrier for the upside for me. Cleared it, we pushed higher, but we didn't really reach my 160 zone. I was kind of aiming for that one, but look, nothing is lost yet. The bulls could still pick up, but we need to see this pair continuing to trade above the 157.89 zone, and this way, I think the bulls could come back into action here. If we start breaking this upside line right here, then now that's going to be an interesting option here. So if we do break this upside line, taken from the low the 16th of December, then I think it could lead to some larger corrections back down. USDCHF, just there we go, mission accomplished actually. Mission accomplished, because what I was aiming for here was this downside resistance line taken from the highest point of November. And yeah, we did have a good test of this downside line. Great, wonderful. What's next? Basically, next to this point, you just have to wait and see, because we're coiling up a little bit. We're getting into a bit of a squeeze. And in order to go higher, I need a break of this downside line. For the downside, yes, I need to break of this upside line. So pretty much straightforward, so keeping an eye on this one. Anyway, let's jump into the commodities, ladies and gentlemen. Boom, gold. Okay, yesterday we had an interesting day. We were seeing some, a correction back down, quite a decent one, I think. And today, and then after that, closer to the end of the U.S. session, we kind of recovered everything, right? Almost everything. Look, I'm keeping an eye on the 4,643. And I want to see, a nice good clearance of that. Something tells me that we're not done with the upside. I think there's still some room for some higher levels. We did form something like a hanging man here, like actually a hammer, and could be, still seen as a continuation pattern. So look, be careful today, but if we do pop above the 4,643 zone, then yep, I will consider some higher areas, going maybe towards that 4,700, or maybe even higher. Let's see. For now, like I said, it's an interesting one. It seems like we're getting a little bit of a pause. Silver, actually, look at this beautiful correction back down all the way to the 86.5 zone. Boom, found support here, rebounded, and honestly, this was a roller coaster ride yesterday. Looking at this 30-minute chart, look at this. First, we were selling off in the at the beginning of the day. Found support near the, like I said, near the 86.5, and that was around early hours in the morning. And then we started pushing higher again, kind of recovering. But then it was a little bit of a mix here. It seems like we'll sell off again, but no, actually we failed to reach the lows here of the day, and we started pushing higher. I will say it this way. If you're looking for some higher levels, I think it's a very straightforward approach here. Keep your eyes on yesterday's high, basically, which is the current all-time high. If we clear that 93.69 zone, excuse me, then yes, first of all, a forthcoming higher high will be confirmed. And well, look, I talked about the 100 level on Wednesday as well, because look, my thing is this. Although I do believe that this is way overstretched, honestly, but look, we cleared, I said to you previously, if we clear the 83.75 territory, that's the highest point of December, then yeah, look, might as well kind of end up traveling to that 100. It's not a big problem here. It's not a big issue for this commodity to actually make its way all the way there. So if we are if we can get this pop above the 93.70, or sorry, say it's not actually 70, actually 93.70, if we can clear that one, then yes, great, I will go for that 100 level. Also, something that I talked about with you was this little chart. Let me just show you what I'm talking about. So this little chart, and if you remember on Wednesday I pointed this out. This is a ratio between gold and silver. So currently gold is only 50 times more expensive than silver. While I'm saying only because, well, last year at one point we were 100 times more expensive, but then started quickly diminishing. So now we saw a major drop here to the downside. Actually, I will jump into a monthly chart. Look at this. This is more spectacular. Yeah, this is by the way 2020. This is the point where gold kind of significantly rallied here, but then silver started picking up slowly. Actually, I would say this was more of this drop here was more of a gold retracing, a little bit. Now here, this drop is actually silver actually being, the more valuable kind of precious metal. Maybe because it's also a risk haven, it's a safe haven. It's also like seen as a good store of value. It is used in a lot of things. It's in technology that's like probably number one right now. Because it's a good it has a good conductivity. And of course, not to mention jewelry as well. I do like silver jewelry myself. I mean, sometimes prefer to, again, depends. Sometimes prefer to gold even. Yeah, it's like I said, it has its use. It was always attractive because it was on the cheaper side, but certainly now it's no longer the case. Still the people's mentality is that silver was around like $30 per ounce. Now it's like what, almost 100, 3 times more expensive. Wow, that's like too much. But I think that going back to the silver chart, I think that this is going to be like the new norms. Now we're going to be establishing new norms. Look, we did the same thing back in 1980. We rallied, hit the 47, and then we retraced back all the way to kind of below 10 for some time. Then 2011 came, we also rallied again back to that 47, and then we retraced. I think, and then we retraced actually to above 10. So we're kind of going slowly to the upside, right? Eventually this will fall as well. It will retrace. And ideally I would like to see, a retracement all the way to the 50s. I think it's quite doable. I think it's quite possible, but it will take time. Don't get me wrong. It will take a few months, certainly. But yep, it's the moment we're not there yet. We have not received a signal, for a sell. I did a little short here recently. You can check it out here. And this one right there. So like I said, I told you in there that I'm not really seeing a signal yet, so we need to be a little bit more on the careful side. But certainly, is it attractive to the downside? Yes, it will be, because what comes up must come down. We thought that nvda might not correct lower, and it did. So there we go. It's like this nvda is like the gold standard, something like that. Well, gold and silver standard. Anyway, so coming back to the ratio which I talked about, gold and silver ratio. So eventually this will stabilize. Eventually gold will take the crown again, but the only thing is what we don't know right now, how further it will fall here. Because look, I said to you on Wednesday, and I was I think a little bit what's the word for that? Maybe I was a little bit not ambitious, but not naive, no, but or actually maybe I was a little bit naive, that thinking that we will drop below 50 when, let's say, gold will go to 4,900 and silver will reach 100. Actually, silver just proved that it is the metal right now. It is the number one metal, and we dropped below 50 yesterday. It was interesting, and gold was still around 4,600 something. But yeah, silver rapidly increased in value, and it dropped below. Like I said, this ratio dropped below 50. Now look, I think there is room to for further flight lower. And I think that even if gold doesn't travel to, let's say, my the level that I'm talking about, the 4,900, I think silver will rally further, and we could see this one actually drifting further south here, maybe even getting closer to that 40 level. So we had these big drops here. This 2011, look at this. 2011 we had this major drop. 1980 we were even at 15. So I think that silver still has potential for a move lower, unless, and actually let me just do a technical analysis on this one. There we go, upside line. Oh, that's a beautiful thing here. So a nice little trend line here, capturing the 1980 peak and actually on this one, the bottom, 1980 bottom and 2011 bottom. And what I talked about previously, that these are the peaks where silver kind of peaked. We're now going through the third historic peak. So maybe actually going all the way radically here to this level, I think to the 40s, I think is quite doable. I think this is going to be the next good target. And you know what? I think it deserves a little alert here. There we go. Yes, continue anyway. So I think it deserves a little alert. And yeah, we'll see. We'll see what's going to happen here, ladies and gentlemen. We are, like I said, we are at an interesting spot. I think silver has room for more upside. And by the way, this could drop earlier because don't forget, this is a ratio. Because if silver just continues to rally and hits that 100 level, and gold will be lagging behind, gold could still go higher and hit that 5,000. But maybe silver will go further, will go quicker, hit the 100. We'll see the ratio dropping all the way closer to 40, and then it will stabilize because silver will, just calm down, but gold will start picking up. Maybe silver will also rise, will continue, but not as fast as gold. And this is where, like I said, the ratio could stabilize and we could see the curve coming, that chart going back up. So again, this is like something to keep in mind. Ladies and gentlemen, let's have a look at platinum because we're gonna, again, running out of time here. Platinum, good move, but I'm watching this 2,300 zone, 220.99 zone, actually, to be more precise. That's the highest point of 2008. If we stay at the end of this month, and we still have like some time, if we stay below this hurdle, below this 2,299, now this is where the interesting bit comes in, and I think we could see a reversal back down. Palladium, a good result. We have tested the 38.2 here on the Fibonacci retracement, but we're currently struggling to stay above that hurdle. So yeah, in a way, there is also a possibility for a reversal back down. Copper, also beautiful movement, fantastic. Cannot say anything yet, but in general, this should reverse back down at some point, but not yet. Everybody's still in technology, but hey, remember the VIX I was talking about? It should kick in at some point this year, so that would be your cue maybe for the metals as well. Sugar, my beloved sugar. Let's jump into daily on this one. Found good support near the subside line, initially pierced through it, and now look at this, it's trying to make its way back up. Okay, look at this. Let's see if we can actually travel back up. Probably I'll get a little bit more positive if we get a break through this little downside line, and then yeah, I'll go a little bit higher. WTI oil. Now this is what I was talking about earlier about oil. Now look, I mean, we had spiked above $60, and I think that the current White House administration really wants to keep oil somewhere around the 50s, right? Maybe even a little bit below that, because it's not really, they need to kind of save their economy in a way. That's why maybe they need all those resources. Maybe they're broke or something. Well, we know that the U.S. has a lot of debt, but and when tariffs are when you're trying to kind of cover that debt with tariffs in a way, ideally, but now but it's still not enough. So you need more. You need more natural resources, and you need to keep that oil like on the lower side, and you want to control Venezuela oil, because again, you don't know, if they would, basically it's in your interest, right? Your interests are to keep oil lower, and that's why you're gonna attack all the oil producers in order to control their supply, so that they wouldn't suddenly cut off, the supply, and then oil kind of rallies significantly. So yeah, it's like I said, always look for the money, right? Always look for the money. And at the moment, looking at oil, it's stabilized because, again, it dropped heavily back down, back below $60 because of the plans that the US might not invade. But again, like I said, it's there's a lot of ifs. Will the oil price be the driver force for not invading, or actually they will just, what, we don't care, we'll take the little hit. It might spike here higher, but then we'll stabilize it, and we'll kind of gamble here, and then it will drift back down. So let's see what's going to happen here. Natural gas very quickly continues to drift lower. Yes, so for now everything is still bearish, and looking at this picture here, we remain below the 3.20 zone. If we continue to trade below the 3.2, then yep, further declines are possible. Bitcoin. Cryptos, ladies and gentlemen. Bitcoin, after a good rally here, at one point it seemed that we could actually drive all the way to that 100,000 zone again, but look, it retraced back down. I'm not saying that this is actually a bad thing here. No, it retraced. Now let's see if we stay above this 94,500 zone here. If we do, then yep, I think that there is a possibility for a push towards that 100. Maybe, like I said, by the end of this week, we could hit that 100,000. Let's see. For the downside, well, at this point, I think that the easier option is to keep an eye on the 94,500. If we do fall below it, I think a larger correction back down here could be possible. Bitcoin Cash 600. Look, yesterday we drifted lower, beautifully tested this upside support line. Look at this, what a hit. I talked about this upside support line before. This is drawn from the low of the 19th of November. Look, and somebody might say, but why didn't draw it from here, for example, from this low? I kind of seen this more of as a big noise, and this was a little bit more rational movement here. This was like just a reaction of some sort. However, I have to say, and I think that everybody needs to agree that all the things, all the levels, all the lines that we draw, all the technicals that we put, they're all subjective. Okay, this is part of the analysis in order to try to understand, where the next level could be, where the next target could be, to see some sort of patterns in a way, and this is what technical analysis is. It's still subjective. It's not super objective. It's still subjective, like everything in the economy. And that's why we take these assumptions, and so far we can see that more than probably 60% of the times they work. So why not to apply those, anyway. But again, not everything works all the time. We have to, this is for sure. This is like it's a given. Now that's an objective thing to say, that not always everything works correctly in technical analysis, but the same story in fundamentals. You get those wrong as well. Ripple, ladies and gentlemen, Ripple also dropped back to the closer to 2. So let's see if we can stay actually somewhere above this little territory right here, this 2.03. If we do remain above the 2.03, yep, another push higher could be possible. Litecoin, this one, look, Litecoin was good yesterday. It was hanging around above this 74.82 zone, but then it kind of failed, and there we go. We dropped below the 72, which this level, sorry, 74.82. We dropped below that, and now, yes, we're here where we are. We briefly dropped below the 70, the psychological 70. So now the question is the psychological 70 level going to be that good area of support, where it could actually reverse back up, from where it could reverse back up? But you know what, at this point, I think what I'm going to do is I'm going to keep an eye on the on the 74.8 zone. If we climb somehow back above it, this could, to me, be seen as a little bit of a bullish indication. Dogecoin, very quickly, Dogecoin, similar story, had a good result initially, but now, we're fading, it's fading away. Am I getting bearish on this one? No, not yet. I think that there is room. There is room for, for some more upside, as long as this holds, as long as this 20-day SMA holds here. But certainly a confirmation breakthrough one of these barriers probably would be better. Polkadot also had a great breakout here. Had a great breakout, but you know what? I think, what's happening here? I think that what we're seeing is this, the theory that I keep on talking about, where whenever we break a trend line, we tend to revisit it from the other side. And this is something that kind of maybe is happening right now. So I would say don't be surprised if we actually see a little bit of a further drop here in cryptos, in some cryptos, and especially, let's say, Polkadot here. Maybe we could actually end up traveling back to that 2.04 area right here. It's a good area of support, don't get me wrong, but I'll get more comfortable with further downside if we do drop below the crossroads of these two trend lines. If that happens, then yes, I'm going to go lower. But if we don't, then hey, maybe there is a chance for a move like, let me just get rid of this, a move like this. There we go, like a curved move back up. Keep this in mind. And finally, Tron. Look at this beautiful decline after a good rally yesterday. Look at this, boom to the upside. Found resistance near the 0.3127, and there we go. We are seeing a nice drift back down. Look, in general, I would say it could retrace back down a little bit more, but hey, let's see if this upside line will provide support. I think that, yeah, I think it could correct back down for now, further down, but if it finds support somewhere near this upside line, taken from the low of the 31st of December, then yes, a nice good reversal here back up could be possible. And then we'll just take it from there. Ladies and gentlemen, that is a wrap. That is a wrap for this week. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Please don't forget to subscribe in order not to miss any of the future videos here that come out, the shorts and everything. And I hope you, like I said, you find this content good, and I hope you find it useful. That's probably the more important thing, useful. And ladies and gentlemen, thank you for this week. This week is not finished yet. Like I said, keep your eyes on the weekend, because like I said, big conflicts tend to start during the weekend, so that there would be some time to digest everything and then kind of start Monday. So that's why you don't try to keep positions overnight, especially over the weekend, because again, because of geopolitics. Ladies and gentlemen, thank you very much for watching and listening. I will see you on Monday, as always. Yep, at the same time. So check out the calendar, and have a beautiful trading day. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I shall see you on Monday. Bye-bye.